Welcome to the weekly review of the markets for week ending February 8th, 2019 from Hernandez Retirement Services. This is Agustin Hernandez. Before we begin, the opinions voiced in this material are for general information only. All performance reference is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Technical analysis is forecasting of future financial price movements based on an examination of past price movements and cannot predict the future. Technical charts referenced are subjective. No strategy can ensure success or protect against loss. Investing involves risk, including loss of principal. On this week's agenda, I will go over the results of the S&P 500. Last week was a continuation of the 2019 rally, but it failed in its first attempt to get above the 200-day. How strong is this rally? What percentage of stocks in the S&P are above their 200-day moving average? And is total positive volume rising in the S&P? Is the pullback on the 10-year note over? What does momentum tell us? And finally, Brazil had a pullback last week. Is the rally over? We start this week with the S&P 500. Last week, the S&P continued its winning ways by squeezing in a 0.14 gain. But despite the gain, this index failed in its attempt midweek to break above its 200-day moving average. Now, that does not mean anything good or bad. But despite the strong counter-trend rally, the index is still in a downward pattern. Now, the good news is that the 50-day moving average is attempting to slope up, and price being above also shows good short-term momentum. For now, based on price and the moving averages, though we had a strong rally, nothing has changed regarding getting into a bullish run. Now, let's see what some other indicators are telling us about the S&P. Now here I have included three other indicators to go along the price movement of the S&P over the last 3 months. Now the first box below price shows the percentage of stocks in the S&P above their 200-day moving average. Here we see that 56% of stocks in the S&P are above their 200-day moving average as of Friday, February 8, 2019. And like the price of the S&P, this has risen ever since late December. Now the box below that is the advanced decline line for the S&P. This indicator shows net of advancing stocks versus declining stocks. Here I also put in a 200-day moving average to give us an idea of the longer-term momentum of this indicator. And the good news is that the advanced decline line is above its long-term trend line. In fact, we can see a nice recovery from the lows of late December when this line did fall below its 200-day line. So this shows a growing strength when it comes to stocks advancing. Now the final box shows net volume for the S&P. This indicator shows us a net gain in volume versus net losing volume. So the good news is that like the other indicators, it has risen over the last month plus. And it is also above its 200-day line, which took longer than the advanced decline line. Now, I would like to see this line go up further, which means there is a strong volume behind this rally. But for now, these are positive indicators for the S&P. Now, let's see what the MACD is telling us about the S&P. Here I included the S&P and its MACD line. The moving average convergence divergence is a trend following momentum indicator that shows the relationship between two moving averages of a security's price. The MACD helps investors understand whether bullish or bearish movement in the price is strengthening or weakening. For our chart, that means when the bars on the MACD box goes green, that shows there is positive momentum, and when it turns yellow, that shows momentum is negative. The more recent positive momentum is correlated with a great run the S&P has had in 2019. But on Friday, we do see weakening in the momentum. Now, it is not automatic that the MACD line will turn yellow or negative. It just means short term, despite the rise in price, the positive momentum has slacked off a bit. Let's see if next week the S&P can rally and hold off a negative crossover. Now let's check in on the US 10-year note. The US 10-year Treasury Note had another positive week, gaining another 0.40%. The good news for this index is despite the major rally by the S&P, it has held its own. It has had multiple short-term pullbacks, but not once has it tested its 50-day moving average. Now the question is, will it be able to muster enough strength and break through its 52-week high? Let's see what the MACD of this index has to say. Now here, let's concentrate on the MACD line of the US 10-year note. It has been in negative momentum since early in the year, but recently it has begun to get a bit of momentum on the upside. Now technically it is in positive momentum, but it is very weak and early. In these charts, we would like to see the green bar sticking out more. Now, with this possible positive momentum crossover, will the 10-year note finally gain strength and blow by its old high? Let's see if in the next few weeks this rally is just getting started, or will it fail before gaining strength? Now, let's go and look at the Brazilian Bovespa stock index. Now, last week, the Brazilian Bovespa took it on the chin. It was down 2.57%. Now, even with that drawdown, price is still comfortably above its 50-day moving average. Now, when indices are in strength, pullbacks happen, and sometimes they seem large, but if the bullish patterns are not changed, it is just a pullback. Now, another thing that this index has going for it is that its 200-day moving average is on the rise. Those are good signs of a rising bullish run. Now let's see where this pullback ends and when a new rally begins. Maybe its MACD can give us a hint where this index is. If we can concentrate on the Bovespa's MACD indicator, we can see that it went positive in January. And the index had a nice rally. But towards the end of the month of January, we see momentum getting weaker until it finally turned negative last week. Now, not all rallies are straight up. Let's see how strong this rally is by seeing when the momentum gets back to positive. If it can turn to positive, then this index has the potential for another strong rally. What does this mean? The S&P rally did stall out last week. It saw its 200-day moving average and retreated. Now let's see if it can muster another rally soon to see if it can finally get above its long-term moving average. If and when it gets above its long-term indicator does not mean that it is all clear for a bullish run. I would like to see its 50-day moving average get above its 200-day line, and I would like to see an uptick in volume strength as price rises. That would be a strong indicator that this rally has legs. The 10-year note keeps chugging along despite the rise of the S&P. Now, after its initial pullback, it has begun to rise, but how long can that last? Are the bond buyers seeing something in the economy that is allowing this index to stay strong despite the U.S. stock market rally? Or will this index finally run out of steam and begin the process of a decline? It has been interesting to see the fight this government obligation has shown in the face of major headwinds of the U.S. counter-trend rally. Finally, we end with the Brazilian Bovespa. Despite its pullback, it is in the early stages of a bull rally. Both moving averages are sloping up, and price has not even fallen below its 50-day moving average in its recent drop. Now, for it to have another strong rise, the MACD line will need to turn positive while the MACD is in strength. Let's see how strong this index can get. Before I end the video, I want to circle back to the S&P and its indicator, the percentage of stocks above its 200-day line. Remember that the S&P is a combination of many stocks, so there will be ones that are bearish in good times, as there will be stocks that are bullish in bearish times. What I try and portray is the overall health of the general market. I would like to thank you for viewing this video, and I hope it was helpful. Please like and subscribe to my channel for future videos.